Hey, hello everybody. Hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. So, look, I just wanted to quickly share with you what's happening on Wednesday. So, when I'm recording this one on Tuesday, but maybe you're watching this one on Wednesday already. So, and I'm talking about Wednesday, the 19th of February. So, look, we do have a relatively busy schedule, so this is just a quick update on a few events that are happening. So yes, we do have the RBA interest rate, actually RBNZ interest rate decision. The RBA interest rate decision happened already on Tuesday morning, so I'll pick up on that as well very quickly. However, the main focus now falls on the RBNZ, and also we do have some other important events like the British CPI. So about all this and a little bit more in a few moments, but just very quickly before we jump any further, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. So look, I'll give you a few seconds to read the rest as well. So, like I said, the purpose of this little video just to kind of give you a little bit of a heads up, and in terms of what could we expect in general. So maybe this could help out your trading. Look, also before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. You can always reach out to us. We'll be more than happy to assist. So. Let me just double check everything, what is happening here. Yes, perfect. So now let's jump into the economic calendar actually. And this is what I wanted to show you. So I'll probably start from very briefly mentioning what happened this morning in Australia. We got the interest rate decision, and first time since 2020 we got a nice little cut here. So yes, for about 4 years we didn't have anything. We did have shifts, we had increases, but in terms of cuts, yeah, that took us a while, a little bit. So we got to 4.1. That's fine. However, as the RBA officials kind of stated, that it's not really an indication of that we're gonna see like further cuts or anything. They're gonna go step by step, and they're gonna look at inflation and what's happening there. At the moment, inflation is kind of, as they like to say, sticky, and might stay like this for a little bit, because if it starts picking up again, well, they will have to exclude any potential cuts. They will actually, on the contrary, they will have to start shifting their attention towards slight higher levels. But again, that's what's in regards to Australia. But what I want to pick up here, of course, is New Zealand. New Zealand RBNZ interest rate decision. That one is also expected to go for a cut. However, not a 25 basis point cut, but more of a 50 basis point cut. Well, that's quite a significant, I would say, significant move in my opinion. I think New Zealand is kind of on that verge of rushing and trying to cut rates as quick as possible, because maybe they are expecting the fact that inflation might pick up very quickly in New Zealand at a later stage, which could eventually mean that they would have to start hiking rates. However, at this point, New Zealand inflation, which we get every quarter, has been on the lower side, as it had for the past couple of quarters. It came out at 2.2%. So what we're seeing is basically a slowdown. So we were falling, from 4.7 in Q4 2023 all the way here down to Q3 2024, and Q4 2024 also, like I said, came out at 2.2. So we're now kind of stuck at this level of 2.2%. And it seems, like I said, it seems like the bank wants to go into this cutting mode as quick as possible. They want to drop their rate as quickly as possible, so that if inflation starts picking up again, they will have to control it by hiking rates. And as we know, always it's better to to hike to hike rates from lower levels rather than the higher levels. And another thing is that the Australian economy, let's not forget about that it's New Zealand economy, I'm still thinking about RBA. New Zealand economy is more vulnerable and less sustainable, yeah, I mean, look, at the moment, what we're seeing here is like in New Zealand economy is like more in that sense that it can be affected very easily, and let's say it goes to extremes quicker. Either the inflation drops very low, or we see, let's say, inflation spiking up very quickly. So that's why they're, sometimes it's difficult for them to maintain that. So maybe they're seeing interest rates as, as the only way that you can control that. And that's why they understand that they would probably need to hike, and they want to drop the rates as quick as possible in order to lift, in order to be able to maintain, inflation at a later stage if it starts picking up. At the same time, however, we understand that the slight inflation, right? It's also an indication of growth. So maybe the fact that we're seeing those cuts so rapidly is also like an indication that they want to boost the economy, they want to support it, and maybe they want to see like a gradual increase in inflation. However, we have seen a gradual, like a very sharp decline, I would say, in every quarter. So maybe this is, like I said, this is also like part of this. Now, in terms of like NZD USD here, the situation with the New Zealand dollar against the US dollar. Well, recently we saw some action to the upside after we had a nice little reversal back up here in the beginning of February. We cleared a key resistance area. We cleared the 50-day EMA here on my daily chart, and we're currently stuck above it. So as long as we stay above that area, there is a good chance for this one to push higher. However, I have to say that look, if we know that the interest rates are going to get cut, then in a way it's not really good for the currency, so it may weaken it, and this is what we are already seeing. So look, I think that the market right now is taking everything as it is. Maybe the market already kind of is pricing that in, and that's why we're seeing a little bit of a retracement at this point, just because, like I said, a day before or a few hours before the interest rate decision. So look, I will say it this way. Given that everybody understands that this is already going to happen, maybe this move is already kind of taking that into consideration. And given the fact that we're seeing a little bit of a weaker dollar here, somewhat weaker dollar. Yes, we're seeing a little bit of retracement, that's fine. And that's what kind of is reflected in that NZD USD pair. But if the US dollar continues to slide, I mean, even though we are going to get that cut, that big cut from the RBNZ, we could still see a push higher here, purely because of the weaker dollar. So long story short, from the technical perspective, what I'm seeing here, like I said, is this idea that I will remain somewhat positive for now, as long as we stay above the 50-day EMA, shown as the green line. My next target will be somewhere around this 100 and then maybe 200-day EMAs. But for me to get very bearish on this one, I would say I need to see a drop all the way back below the lowest point of February, or should I say the current lowest point of this year, in order to get comfortable, let's say, with the downside. This whole area, it's a range. It might end up being as a range. Maybe it's going to end up as a rising channel pattern here. With a little breakout being around this area. Let me just grab a magnet here. There we go. So, where's that channel? There we go. So this is what I'm talking about. Why is this? No. This is incorrect. This is not what I'm talking about. Look, parallel channel. There we go. So this is. There we go. That's the one I'm talking about. So maybe this is what's going to happen, and basically, maybe this, like I said, this up move here could be something like that. It could be trading within that rising channel, but again, if you like this idea, maybe then you can keep an eye on the lower side of the rising channel. And if that gets cleared, then yes, this could in a way open the door to some lower levels. But again, like I said, if you do like, this more adventurous approach, I would say, for me, like I said, I like to be a little bit more on the careful side, and that's why I wait for these clearances. But hey, I'm not blaming you, so something to keep in mind. If we're looking for some higher levels, look, I think that the breakout through the upper side of the rising channel would be nice. Let me just adjust the colors here a little bit, because again, this is this is what I need to have a look at here. Okay, this is the brightness of this, but this one is going to be the brightness of the lines. There we go. So if we can get a nice clearance of the upper side of this rising channel, basically at the same time kind of clearing the this barrier right here, the current highest point of February, then yes, great, potentially more buyers here could join in. So that's my technical approach on NZD/USD. Let's see how this is going to play out. Let's see what's going to happen with what kind of reaction we're going to get from the RBNZ after the RBNZ decision. But so far, I'm kind of leaning towards the fact that if the US dollar remains on the slightly weaker side, then cut, no cut, still I think that won't matter. I think that then NZD/USD could still be under the bulls. So yeah, let's see how that's going to play out. So ladies and gentlemen, that was just a quick idea on the RBNZ interest rate decision. Let's see what's going to happen next. And certainly, yes, I hope you found this useful. Let me know in the comments what you think. Just, share your thoughts, and we can go from there. So ladies and gentlemen, thank you very much. I'll see you later. Bye-bye.